Now, joining me virtually for us to have these conversations and other issues is Dr. Aliyu Ilias. He's an economist and development analyst, joining us virtually from Abuja. Good morning, Doctor. Thank you for joining us on the program this morning.
Good morning. Thank you for having me.
All right, Doctor. So, before we get to our conversation, which is us having an overview of some events that have taken place mostly this week in the Nigerian business and economic space, one of those stories that we had earlier was talking about the Nigerian government working now, joined some countries to now be able to tax people that earn from foreign countries and foreign. What's your take on that?
I think it's an ideal thing because government actually survive practically with tax. Thank God that Nigeria has some natural resources that we are tapping on, if not most government. So it's a good one if it's a multilateral or bilateral or an international agreement. I think it's a good one. Every citizen should be able to pay tax and in expectation, we also expect government to actually provide the infrastructure and enabling environment for things to thrive.
All right, thank you so much. Let's get to our conversations for the day. Now, capital gains tax has been a thing that we've been hearing, and we saw the effect it had on the stock market on Tuesday. A lot of people, well, maybe not Tuesday, but some of the things that happened, it had its own effect on the stock market on Tuesday, actually, when we lost about $4.6 trillion in a day, the highest in a decade. However, after the clarifications from the tax committee, that's Taiwo Yedili and Finance Ministry, by Wednesday, we saw a boost. The place came back together and all that. But let's get into the conversation on what capital gains tax is. The government is reconsidering a planned sharp increase in capital gains tax to 30%, especially on securities. The change, of course, triggered concern among portfolio investors and capital market operators. Now, there's been a reversion of what it could mean. For case you missed our earlier conversation on it, let's give you an idea of the clarification that was made, a bit of it. Now, the CGT does not apply to salary, wages, transfers, savings, or routine personnel transactions. In case you're saying, all these tax stories, how does it affect me? It doesn't necessarily affect you in that regard. It's mostly on transactions done on the stock exchange, the gains, that's what they're taxing. One of the key things that was said in the clarification was that anything gotten before the 1st of January 2026 will not be taxed. Right. So now, Dr. Ilias, can you tell me your take on before the clarification and now after the clarification?
All right, thank you so much. Being a player in that sector, so it's come as a surprise to us when we get to hear that, and some of the clients, some people started calling that what should they do, and you see that people reacted. Everybody was just trying to an extent to withdraw what they have. But when the clarification came, we also have to get back to them that yes, this is the clarification, and that's our problem with information gap. Authorities, especially anything that's with finance, tax, they need to, and trade and investment, they need to be talking to us every now and then so that they will be clarifying some ambiguity in the case of issues. Because I recall that our major problem was that how will you tax, for instance, people that have been in player for 15 years, you are saying that you're going to tax them, are people now say, "Oh, well, before you tax me, let me just take out my money," which is rational for everyone to do. But when the clarification came that it will continue from January and it will not be, and there's some other incentive also. If you are doing less than 150 million, you will not also be taxed. If you are also reinvesting your money, you will also be, tax will not also catch up on you as earlier thing. I think it's good they always come out to do a lot of clarification.
Okay, now, You said you're in that sector and that industry. Do you have an idea of the exact rate that we're expecting from them? Is this still going to be the 30%, or there's still a further revision that's coming from the federal government for capital gains tax?
You recall that in the second day of that pronouncement, the Minister of Finance came out and said they are going to be balanced capital gains tax. So that simply means that there's opportunity and chance for reviewing. So let's keep our finger crossed. We hope that it will be reviewed as expected, because from what he said and from his body language, that's the resultant effect. Though for me, naturally from October to December, there's always a kind of people much more selling. And also, if you look at Trump pronouncements too, it could be an effect. But the major thing was the capital gain tax. So from what he now said, I'm hoping that it will be reviewed. We are waiting for the next pronouncement.
Now, what are the outflow risks that could happen with this capital gain tax? Since they brought it up, what could actually be the risk generally? Without the clarification, and with the clarification, what would be the risk for capital gain tax on the stock exchange and the economy?
Right. I think basically when we hear taxation, and it simply means that it's going to take more from people in the field. In as much as we want a very, very good infrastructure for the business, we want that sector to be well secured. But definitely, if you are increasing tax, that simply means that if I'm expected to get a particular amount, I might be ready to minus that. So it will reduce disposable income from that sector, also from the player. I think that's just the interpretation of it.
Could it slow down IPOs or secondary listings or board issuances?
Well, the fact is that people that are buying are also very calculative. If you look at that sector, you must be very, very smart in investments. So I'm not sure it will affect, because if you look at our bond, Euro bond, well sold. If you look at, we are doing about 40% or so. I think we are doing well in that area. So it's not going to that show to an extent.
Now, if this was to be enforced, of course, we're expecting enforcement, but a stricter enforcement, will it in any way weaken the stock market activity?
Well, from what the government said, it will boost the confidence, and I should also allude with that. There is not every tax that we should also look at with negativity. So, bringing this, if the infrastructure will be very strong, if the confidence will be there, any stock globally, what people actually want to hear is about the confidence, it's about the structure of it, it's about the level of volatility, it's about the political and economic volatility. So if we have everything other things, people will come in and invest. In fact, it's even gladding that we have much more local people investing more in our stock market. I think it's a good one for us.
All right, now, you mentioned exemptions earlier, or rather you said incentives. Should there be some sort of incentives or exemptions that would attract foreign portfolio investors?
Right. You know that the the kind of incentive they are giving now is actually for the small players. When you are doing about 150 million, so they say yes, you'll be exempted. And also, when you are investing that money, I think it's a good one. They are incentivizing it so that you don't think what's actually applied to somebody who is doing 1 billion is what is applied to somebody who is doing 100 million. I think that's the incentive they're actually looking at. But they can also go back and look inward more to create more incentive and more confidence in that sector. Because if you look at the Nigeria economy itself, the leading sector in terms of GDP is still service sector, and service sector is being driven by this stock, stock. So I think it's a good one. If they are incentivizing it the more, it's going to strengthen the economy.
Now, what compromises could help balance out revenue generation and market stability?
Right. Basically, I think government should be engaging stakeholders the more, because there are some things, if you sit down in the comfort of your office, you might not be seeing. But when you get to speak with the with the people in the industry, you get to know more. Look at the Taiwo Oyedele. He was a tax man working with a private firm before, but he always come out to give his side. And government decided to engage him. It's because he's coming from that private sector. So I also urge him to actually keep engaging and looking at what is happening in the real market for him to make a decision alongside the federal government.
Okay. Now let's go to another story that hit us this week, and that was the issue of the 15% suspended fuel import duty. Now, it came up, and of course the outcry was there. And just like yesterday on the program, I talked about the fact that it seems like we make policies, we make pronouncements, then we look at the reaction. Are they reacting? Then if they're reacting, then we go and decide to either rescind it or put it on hold for a while. It just seems like we're doing a reactionary kind of a policy implementation in Nigeria. But yes, it's happened now. The federal government has decided to suspend and put on hold the 15% fuel import duty. What's your take on that? So, because if before you answer, we have people that were for this. I know that MAN was in support. I know that ACCI was in support. I know that NECA was in support. And because I think the Labour Congress was not in support of it. So how, or rather, what's your take? On what side of the divide do you stand?
Right. I think for me, it's not bad for you to make a decision and see that there's a kind of error and actually adjust it. The one that will be bad is when you are adamant and people say something is bad and you decide to go ahead with that. So for me, I think government has done the right thing. Kudos to them that they could listen to the cry of people. They also look at the multiplier effect of it in the long run, how it affects Nigerians, and that's why they rescind that. So it's a good one that they are rescinding. The Nigerian government also need to be cautious at these days. Nigerians are so anything that has with taxation, it becomes a negative optics for Nigeria. Because as we see this government, it appears that they do more in terms of taxation. They have penchant on how to generate more money. So maybe perhaps that could be the problem itself.
Now, this 15% tax was not to be implemented in the foreseeable future. It was implemented immediately. So, say for the sake of speaking or conversation, somebody within this last 1 week has already imported fuel at that 15% tariff. What happens? Who bears the loss now? Because are they going to sell their fuel at a higher rate to recoup the money? What actually happens here?
Yes, that's the problem of policy some sorts. We always cry about policy and this is a good example of it. I think there's what we call collateral damage, which is not good, and it's not something that we should play on. I think it has affected, but such people can actually also put up their concern to the federal government. This is where government need to be able to cushion some effect. So I think government, they should put it, strategically through their association and put their costs and what they have actually suffered with this brief time. Perhaps this is government. I don't think once they have a pronouncement and implement, if they change, then everything goes on. But as a business person, it must have might have had a negative, effects on them. But for me, government is government. They think yes, they should rescind it. So they will say it should be even be thanking them that they rescind it. What if they decide not to?
All right, so now they've done this suspension. How does this impact the local refineries like Dangote refinery? What impact would it have on them?
Right. I think we have to be cautious beyond the Dangote refinery. If we are not doing importation, yes, you can say yes, we can implement that, but we are importing. And Dangote is also exporting. So I think we should not be doing our policy based on Dangote only, because once we do that, that means we are encouraging monopoly in our country, which is not a good one. So for me, it would have been good for Dangote, but Dangote is not the only one in the industry. So petroleum, Petron are there, petroleum marketers are there, a lot of people are there, and we are not producing 100% of what we actually needed. So I think it's a good one that they have rescinded it, and they must not be based their judgments on one company.
Okay, now, are there alternatives that the federal government could deploy to offset the supposed income that would have come in from this import levy that has been suspended?
Right. Government have different sources of income, and I don't think it will be a major bottleneck. Perhaps, just like Pareto analysis, that any policy that got people worse off than good that benefit is not a good policy. And if you look at it, if they have actually go ahead with that policy, it should have reduced our purchasing power again, because that simply means that fuel price may likely also go up. So I think government will get a lot of things, other things from that. Perhaps we are even, remember, we are even oil producing country. So there are some things that we should not even be discussing in terms of bringing. You remove a subsidy, you are still bringing. For me, it's even not a good one, because having removed a subsidy, 2 years down the line, we've not even benefit the removal. You are now also bringing tax in that area. I think it's better the way they actually remove the 50% charge.
Now, does this, back to the thing about policies in Nigeria, this suspension now, does it in a way signal policy inconsistency, or does it signal responsiveness?
Right, right. So the danger of it is that if you look at global community, these are what they actually mostly look out for. They want to know level of policy consistency of a particular country before they can come and invest. It's a negative signal, simply because it shows people that want to come in with their foreign direct investment that Nigeria have policy somersault and policy inconsistency, and that may actually affect. The beauty of every investment is that for you to be able to predict what happens short term, what happens medium term, and what happens in the long term. That's when you have the confidence to actually invest. So this shows that government can change their policy at any point. That perhaps look at Tinubu government, it has spent chance for policy making with different nomenclature. So we should be expecting a lot of things. We are not in that stable economy that you don't expect a policy change.
Now, if this 15% levy had remained, what was the impact it would have had on inflation?
Right. So let's not even look at uh okay, let's look at it in that direction that you have actually brought. That simply means that there will be rise in the price of commodities. Anything that has to do with fuel, it affects every other thing. It affects transport, it affects food, it affects logistics. So by now it would have also translated to some level of inflation. You could see that we are having consistent decline in inflation. That would have been another thing that will happen. Perhaps that's part of the things they actually noticed to withdraw it.
Now, if this had continued to happen, we keep saying, oh, it's a good thing, it's not a good thing for the suspension, but peradventure, it had continued to happen. What would have been the impact on the FX markets? Because that's another thing that impacts the economy as well.
Right. I don't think there's a okay. The fact on FX, yes, that's another thing again that you have to, that simply means that the demand for FX would have been actually more, because people will need it to actually pay that money, because mostly it's on what is being imported. There would have been more issue on the supply side of FX.
Okay, let's now move over to a story that we not actually looked at this week at all, and that is the aviation levy, the proposed $11.50 aviation levy, AP's charge. Now, the NCAA plans to introduce a $11.50 levy per international passenger for the Advanced Passenger Information System, APIS. Intended to fund by the security data systems, but airlines and travel groups warn it will increase already travel high costs and worsen Nigeria's competitiveness as a regional aviation hub. Higher levies risk discouraging travel tourism and business entry. Now, the aviation sector is already quite plagued with a lot of things. We've seen, as of yesterday, a private jet skidded off. So there's the issues of security, there's issue of safety, there's issue of drama on the plane, there's all that. And now there's this 11.50 levy. A few months back, people were complaining about the fact that during the Yuletide seasons, for those who have to travel eastward, the prices skyrocket. Why is this something that we're even thinking about or talking about at this time?
Right. I think the post levies for inbound and outbound that has to do with foreign travel. So it's not much more domestic. It's for people travel out of Nigeria or people coming to Nigeria. But if you ask me, according to the travel or what have you that I saw, they said that is going to be a blow on them because actually we are even struggling to have our aircraft traveling out of Nigeria. We only have only airpiece for now. So what if there's a counter, such outside? So that would have discouraged airpiece the more. And also, in addition to that, you also let's make it clear that Nigerian tickets is the highest, one of the three highest tickets to purchase in the whole of Africa. So for Nigeria to be a hub for tourism, a hub for destination, now 30 December is coming. We're expecting a lot of things to happen, people to travel, into Nigeria. This might be a discouragement to an extent. Perhaps if we could even advise the federal government, I'm thinking the issue of taxation of any sort should take a hold until you have the commencement of the reform taxation before we can move.
Okay, so you mentioned quite a few things. It's mostly for international travel. Thank you for that clarification. But, as you say, there's a thing we do here in Nigeria called Dirty December coming up very soon, and it would impact, flights. But I have a question. Away from international travel, because we know how these things work. We're in a beautiful country, Nigeria. Could it in any way trickle down to local flights?
Right. So the fact is that if you look at the destination itself, where you are coming from any country and you're coming through our international airports, say Lagos, say Kaduna, say Lagos, say Abuja, say Kano, or Port Harcourt, among others. Now, that may not be your main destination. You recall, you may need to also have an adjoined flight to your destination. So that means the expected business that you're expecting in the local flights may also suffer because people that are supposed to come from abroad because of some level of fee. Perhaps remember that the fee is there already; it's not new. They are charging $20 before. Now they are adding $11.5 to it now. So for me, it's going to be a kind of discouragement to people that want to travel and that are going to also have a local route movement.
Could this in any way impact, air traffic flow and frequency for us in Nigeria?
Well, that's why I said it's going to affect the number of passengers that we're actually having. I think that's how it's going to affect Nigeria because
for international flights, I mean.
Say that again.
For international flights.
Yes, it's going to affect. Correct. It's going to affect the flow. For me, if I want to travel to America, and I'm calculating how much I'm going to expend on the tickets, I will have to factor everything to it. Because, those people that are going to design the charges and what have you would have factored it into it. So I'll consider how much it costs me to go and come and I resolve to stay where I am in a place of trading of such amount of money.
So I want to run a scenario by you. Now, is it possible that this in its way could send business to other countries, other African countries? Because, say I've heard of a time where people want to travel, they go to Togo because I think it's cheaper to go from there to certain countries or it's a lot more easier or something. So if this price increases, is it likely that we will send business to our neighbors, neighboring countries, say Ghana, say Togo, because maybe you tell yourself, if I fly to Togo and fly from there, I will, the price is cheaper. Is that a possibility?
Absolutely. The way it affects manufacturing sectors, that most of them are now in Ghana because of the infrastructure, especially availability of energy in those countries. So also if That's why Rwanda is Rwanda. Because if you have been to Rwanda, you discover that it's no way better than Nigeria in terms of physical infrastructure, road, but because they make a point of make it a point of destination for people, they make the if you even enter their Rwanda air, you see that they make it comfortable for you. So those are the kind of things that attract people. Visa on arrival, and you can predict how much you are going to pay for their tickets and flights. So these are the things, those small things that we don't take serious. Those are the things that sum up cumulatively to attract investment and people to your to countries.
Do you think that this levy is the best way to actually help and bring about aviation sector reforms?
Right. So, in as much as we want safety, we want security, I think it's not bad to bring levy, but we must be strategic and look at the timing. So, my concern is the timing of it. Nigeria economy is just getting back, to an extent. So, we should be much more sensitive to work with the timing.
All right, we'll move on from that now to the disinflation and growth acceleration strategy, DGAS, and we talked about that earlier in the week. Now, DGAS is the federal government and central banks coordinated strategy, is a proposed one. They're working on it to bring inflation down in a sustainable, non-recessionary way, stabilize prices across food, transport, and energy, and stimulate broad-based economic growth. Now, one of the things about the DGAS is that two very important things actually is they want to grow the GDP to about 7%, and they want to bring the inflation numbers down to a single digit. No numbers have been touted or stipulated yet, so to a single digit. And the time frame they've given themselves is about 2027. Now, Dr. Ilias, how feasible, how practical, how realistic is this aspirations of the federal government?
It's quite beautiful because this country, especially this president and its people, are always very very ambitious. So it's good to be ambitious. It's not bad. I try to look at the breakdown of what they are going to do one after the other. When you make a how do I call it? When you make a sweeping expectation like this categorically, you must also be able to actually do the work itself to make it much more work. So we want to challenge them to make sure they put those things they are saying in place, because if they bring those things they are saying, especially number one, they said they are going to make sure that the monetary policy is working in tandem with fiscal policy. And this is where we're actually having problem in Nigeria, fiscal policy and monetary policy. You could see that fiscal policy are also always trying to generate more money, while monetary policy are also looking at how they can fix it. So sometimes they are not moving at the same path. For instance, if you just report, the port authority is trying to make more income, and by so doing discouraging more businesses. And if you look at our monetary policy, they are trying to bring interest rate to seven. It's not 27% from 27.5%. So some of us, that's why some of us are saying that you are sacrificing growth for to bring about down inflation. So one now is a good one, and now that they are saying that yes, they want to work together, that means it's going to be a good one. And I can also say it's between the CBN and the Federal Ministry of Finance. I can tell you on paper, all what they wrote, they are beautiful things that the general household will celebrate if it can actually work.
Now, is there going to be a role FX stability is going to play in this implementation of the DGAS?
Right. Ordinarily, we have issue with supply side of FX, especially now that we have a good foreign reserve, about $43 billion. Now that we have more diaspora remittance, and we are also looking at January, looking at December for more remittance, it's going to be a good one. So they must actually work on the supply side of FX. If we can get that side correctly, I think the economy will actually boom, because virtually everything in Nigeria revolve around that. And that's why we said, according to them also, what Dangote is doing, if you can have one company in each sector doing that, that would be a very good one for for Nigerian citizens. Imagine the level at which Dangote is churning out output. Dangote is exporting to America, is exporting to Saudi Arabia that are oil, I mean, oil country there. Or imagine we have that in pharmaceutical. Imagine if they have that one in manufacturing sector. Imagine if you have that in agricultural sector. So this would have been a plus. So if this is their aim, I think it's a good one. But they should not also have a policy pronouncement that will end up with federal government. This was trickled down to the states and to local government. Because I recall when President declared state of emergency on food security, he said that states are going to give some level of hectares of land for farming. We've not seen that because that means they are not having that buy-in. So they must develop a policy. This Z diggers or DGS, they must make sure that it trickles down. And remember, next year too is a year before election. So they may well actually use it to actually galvanize and canvas for people to actually support them.
Okay, last question, and it's holistic, covering most of the conversation. From the capital gains tax clarification to the 15% levy suspension to DGAS, do you think any of these things that have happened this week, will actually affect the upcoming MPC meeting taking place later in the month?
Right. So I think if you look at what happened at the stock market, it has actually reversed itself to an extent. People have actually got the clarification and there is more investment in that sector. Then the issue of the reversal of the 15%, I think it's a good one. I don't think these are part of the measure that they are good. Perhaps what they are looking at, it's 3 months. It will not be what they are looking at presently. It should be a cumulative issues, that have happened that would have determined. But we are optimistic, hoping that the interest rates is going to come down alongside the corridor.
All right, thank you so much, Dr. Aliyu Ilias, economist and development expert, talking to us on the happenings on the Nigerian economy this week.
Thank you for having me.
And that's it for Business Daily this morning. For more of our programs, documentaries, news, do well to follow us on our social media platforms and on our YouTube live stream. I've been your host this morning, Chiamaka Enendu. Thank you for joining us. Same time, same place next week. Bye for now.